So today we're going to be breaking down my six-figure playbook that you can get for absolutely free. And it's not some sort of scam, it's not some sort of guru stuff. I just wanted to make some sort of playbook where I can give some free sauce to you guys because I get questions every single day saying, can you help us with some free advice? So I built a whole playbook and a checklist that I'm going to link down below. When you join the Discord, there's two sections for it. Go and download it, enjoy it. So today I'm going to break it down so you get a better understanding of the playbook. This is what it's going to look like, the cover, when you get into it, and it's going to have a breakdown of absolutely everything when you get the playbook. And then let's jump into it so I can do a little breakdown of it. So to begin with, the first thing that we're going to be talking about is just the contents within there. There's a few things that you have to run through and just get an understanding what inducement is, what supply and demand is, and it all explains it in there. After looking at everything and understanding what that is, we'll jump right into the strategy and how to find the best possible setups. So the first thing that's going to talk about is your key time windows. So your key time windows, imagine we have some sort of price action forming like this. We have some sort of price action clearly forming, and then it's somewhere like here. We're sitting here in price, okay? Our key time windows, what is I'll show you on my actual chart as well right now. We'll zoom in on the 15-minute. Our key time windows, we have three key time windows or three key windows that we want to be looking at. So the first one is Asia session. That is in UK timing. I did also put it in US timing in there. So if you are in America, you can use that as well, and it's already translated for you. So in UK, it's all the way from 10 p.m. until 6 a.m. That's your Asia time. Your London time session is going to be from 8 a.m. till 9 a.m. And then your New York time session is going to be from 2 till 3 p.m. UK time. Remember, these are UK times. So if you're in America or anywhere else, make sure you translate it or have a look on the ebook. It should show you the translated version. So these two sessions, London and New York, that 1 hour is our key time window. This is the only window that we're going to trade within. So only two times in the day, 1 hour each, and you should be able to find a setup every now and then, and this will be very clear for you guys. So let's jump back to the little thing that I made up here, so I can explain it now. So knowing where our Asia session and everything is. So imagine in our window right now, this is going to be our Asia session. Let's say Asia session is right here, and we'll leave that blue. So we've got Asia session right there. And then in our key time window, we're waiting for London to open, and London's probably going to be like here. We'll just change the color to that to like gray, make it a little bit darker so you guys can see. And let's say the market is opening around London. It's coming to that 80 a.m. point. This is where we start looking for trades. In there, the first thing that we're going to start looking for is inducement points and POIs. First of all, you can't use Asia high or Asia low as an inducement point, as it normally doesn't have enough fuel for the market to actually change direction from there. It's more of a target. So the Asia session is just as a target that we can kind of play off and use it as just a liquidity pool. But inducement points can be anything from the 15-minute to the 1 hour or 1 hour above. You're going to find these medium inducements. That's what I call the medium inducements. So 15-minute to the 4 hour is where you find your medium inducements. I normally just jump on the 1 hour or 4 hour and kind of look for it, so it's much more clearer. And right now, let's say we can see this inducement point right here. Oh, let me just do it like this. So we can see this inducement point right here. Boom, mark it out. Mark it as a medium inducement. We have our medium inducement marked out now. Now, what we need to look for next is our POIs. It also tells you in there how to validate a strong POI. By POI, we're looking for supply or demand zones, depending if we're looking to sell or buy. So let's say that we're looking for a sell. How do we validate that the supply zone for the sell is actually a decent supply zone and we're actually going to catch a good trade from it? The way we can validate this is, did the supply zone cause a break of structure? Did it also come from an inducement? That's the two ways that we're kind of going to validate a zone. And is the supply zone within Asia session? If you have a supply zone within the Asia session, your most current Asia session or the previous Asia session, try to avoid that, as normally it can be a smart money trap. It can trap traders in to think it's a valid supply zone, and then it will induce those traders out of the market. So let's look to our left right here above our medium inducement, because we're going to be looking for sells. let's look and see if there's any valid supply zones. There is. We had a supply zone that came from an inducement. So we had the medium inducement right here, or you can even have minor inducement, any sort of inducements, but medium inducements would be the best. So we had a medium inducement, and this high ended up breaking this low. So that means that this supply zone led to a break of structure. So this supply zone up here is valid. So we mark out the supply zone and it is valid on the chart. So knowing this now, what can we start looking for? Now within our key time window, let's say this is going to be our key time window right here. Within our key time window, we want price to have that medium inducement, have this medium inducement right here, tap into our supply or demand zone, depending if we're buying or selling, then give us our lower time frame confirmation for an entry. And the reason why I don't trade supply or demand without a inducement or a liquidity point is because then it's weak. There's not, because the market moves because of liquidity. So the market moves from liquidity pool to liquidity pool. If there's no liquidity, the market's not going to move. So it's not going to solely move off a supply zone. It can, but it's most likely to move if it has liquidity that has been taken before the supply zone. So if price wants to now come up, sometimes it can even build up liquidity. So be very patient. With this type of setup, you need to be very patient. Maybe it might build up some liquidity. Then make the inducement. And after making the inducement, it's going to tap into the supply zone. Now, what do we look for? We have two types of entries that I've given you that you can use: the full break of structure entry or the two-leg confirmation entry. But before you look for these two, what we want from this, after this medium inducement, is now we want a minor inducement, an inducement that happens from the 1 minute until the 5 minute. You want to mark the 1 minute to 5 minute highs. Most likely is going to be the high that was created with the inducement. So you want to mark that out. Let me just mark that out right now. So it's created a little high on the 1 minute. Let me mark out with this one. It's created a high on the 1 minute. We can call that our minor inducement. Now what we want is we want an inducement of this minor inducement, because normally it does one more inducement, which is on a lower time frame. So this is when you're going to start jumping down to the 5 minute, 3 minute, 1 minute time frame when you're looking for these confirmations. Now all we want is one more inducement, causes our inducement. Now we can start looking for the lower time frame confirmations. With the lower time frame confirmations, this is the two options that you have. You're either going to have a two-leg protocol, and you're going to enter off the RIFC from the second leg, tap into it, and then look for a 1 to 3, and then a 1 to 10 for your full TP. Okay. Or you're going to have the minor inducement, full break of structure on the lower time frame. So on the 1 minute to the 3 minute, I would try to look for this. Look for an external high or low, full break of structure, then it comes back to our RFC, and then you look to enter your trade. So let's go off let's do the two-leg protocol on the 1 minute. So we have the minor inducement, and what it's going to create is a leg. So it's going to create a leg to the downside. It's going to have a retracement. Make sure that retracement of this leg is at least the 50% point, so halfway of the leg. Then it's a deep enough retracement to count it as a retracement. Because sometimes what price might do, it might come up a little bit like this and then make a second leg, and I would just count that as part of the first leg. If it doesn't make a deep enough retracement, don't count it as a retracement. So let's say it does a retracement, then has that next push to the downside, and this is your second leg. So now we can start looking to mark out the RIFC. You might be wondering, what is an RIFC? It's a refined, institutionally funded candle. So this is what I look for when I look for my entries. And I normally just set limits as my entries. I never market execute. I normally set my limit, wait for price to tap into it. I'm off the chart. My stop loss is set. My TPs are set. It'll tap me and then boom, it'll go off it. So let me actually go on the real chart to show you what an RIFC would look like. The three things that you want to use for an RIFC is you want to have either that it came from an inducement or it's in the two-leg protocol. So let's say in this case, it was off a two-leg protocol. So now you just want an engulfed candle with, remember, you want an engulfed candle with a fair value gap after it that ended up causing a break of structure somehow. So let me explain this. So let's say you have this two-leg protocol, like I said, 1, 2. So you have one leg, retracement, second leg, that's the two legs. Now the RFC is going to be sitting somewhere around here. You're going to have your RIFC around here. But like I said, it's either going to be in a two leg, or it's going to be that this high induced something and then broke structure to the downside. So let's say in this case, it's the two leg, because we're going for the two leg entry. So we have two legs. This high led to a break of structure of this low. So that's one thing. Now we need to start looking for that engulfed candle and that fair value gap after it. So let me look on the market so I can show you what this would look like on an actual market point. There you go. That's a good example right there. So we might think that this is the top of that two leg. So imagine it's like this. Imagine there's one leg coming down. This is the retracement. This is the second leg. Yeah. So this is that second leg right here. And now we need to start looking for an RFC within this area. What can we start looking at? So this is the high. You might be thinking, okay, yeah, this top one. But remember what I said. Okay, it caused the break of structure to the downside. It caused the break of structure right here. But what did I say? Is there an engulfed candle? Okay, you can somewhat count this as an engulfed candle. Smaller body, maybe a little bit bigger wicks. But after, there was no fair value gap. So we just jump onto the next engulfed candle that we see. An engulfed candle is a little candle that has maybe even little wicks or a little bit bigger wicks, that the wicks are a little bit bigger than the body. So as you can see, it's a little body. And then the next candle after it was a big push that left a fair value gap. So you have your candle, you have your engulfed candle, you have your fair value gap that was left after it. Let me just mark that as an FVG. So we have our engulfed candle, fair value gap, break of structure. So that means that this is our valid RIFC. So we mark this. Let me just delete this. We mark this as our RIFC, and we would set our limit right here. So then after we found this RIFC, we'd put our limit right there. We'd cover the highs. And remember, stop loss wise, you want to stick between anything between 3 pips to 7 pips. Yes, it's very small pips, but this is how we get that high RR ratio. And because how accurate my confluences are, it's not an issue to have such a small stop loss, because I'm so detailed with my entry that most likely it's going to react from this area. So what we're going to see is in the RFC right now, I'm on the higher time frame, so it's not going to be 7 pips or 3 pips. But this, it will still look like this on the 1 minute. Don't worry. The RFC will still look like this. And what you'll see is that price will then tap into it after you cover the high with stop loss. You set your limit there, and then you have your first TP at 1 to 3. So you have your first TP at 1 to 3, and you want your second TP at a 1 to 10. So you take partials at 1 to 3. You take partials at a 1 to 3, and then after you take the full trade out at a 1 to 10. And then break even point. You want to have your break even after the most recent high. So let's say in this case, the break even point, the most recent high or low, depending if you're selling or buying. So the most recent low after I entered was this low. As soon as this low gets hit, you want to set your stop loss to break even. So there's no more stop loss. You're safe out of the trade. So now even if it comes back to stop loss, you've hit break even. You've not lost anything on the trade. So make sure you get that done. How do I get this back up now? There you go. But as you can see, even on the higher time frame, RIFCs work. You can even use an RIFC to mark out your demand or supply zone if you want it very accurate. As you can see, I'm on the 15-minute time frame, an RIFC formed, price tapped into it and reacted from it straight away. You would have even got your 1 to 3 here on the higher time frame, but we're trading this on like the lower time frame 1 minute. So after you hit your trade, that's going to be the model finish. So it's as simple as that. It's literally as simple as that. It seems confusing until someone explains it to you. So after we have the low 2 leg, like I said, we've tapped into there. We've had the minor inducement. We've had now our lower time frame confirmation. 1, retracement. Second leg now. Now we can look for RIFC. Like I explained to you, you mark out your RIFC. It can get very confusing. And then you set your limits here. Wait for price to tap into it. Your limit will enter you into the trade, and then you can cover, depending on how many pips it is. If you can cover just this high right here, okay. But sometimes if you're doing 2 legs, I like covering the whole high. If you're able to keep within that 3 to 7 pip range, cover the whole high is not an issue. So cover the whole high and then aim for a 1 to 3 first, and then a 1 to 10 for your full TP. And remember what I said, set your break even at the very first low or high, depending depending if you're buying or selling. So let's say price starts coming here, so it's coming down, it finally hits that low, then I'll set my stop loss to break even, and then I can just be risk free out of the trade, and that will be my trade. So this is exactly what's going to be explained to you inside the ebook, and then you have it step by step. You have every single confluence, every analogy that I'm using, every word that I'm using, it's all explained in there in very detailed manner. So just make sure that you have a look through the ebook. Just go on the link below, and if you even want to see me use this in a real life trade scenario, I'll link the trade below that I did a trade breakdown using this exact strategy so you can see how it works. So I'll leave that in the first link below. The second link is going to be the free Discord. You click on the Discord, then you have a section that says, actually, let me show you. This is much easier to show you. Here is what the Discord will look like. Let me move my camera to the right. This is what the Discord will look like over here. Over here, you're going to have a section that says free stuff. After you're in the free stuff section, you just want to go here and click either the free playbook, and you have the link right here that you can download it from, or you're going to have the free checklist that I would recommend using. It's just a checklist that you can tick, 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 tick when you have all your confluences, then you can enter your trade. So you can use this together with the playbook. So make sure you get into the Discord and download these two right here. After you download it, that's how you're going to learn how to actually do the full trades. And hopefully I'll better be seeing some winning trades be posted on the Discord. Make sure if you win any trades with this, go on the Discord, go in the win section, and post all your trades on there. And hopefully this will be your first few steps towards profitability. If you're having any issues with this, feel free to message me on the Discord, or you can message me on Instagram, CleverFX, and I'm more than happy to help. So hopefully that will help you guys out as a little gift from myself, and I'll see you next video.